Might be cooked on this trade, guys. My bias is bearish, but seeing this nice buy opportunity off of London lows. Probably gonna get out right here if we inverse this here. I'm in longs. We swept London lows. We have a nice inversion. Honestly, just following my setup. Wasn't expecting to trade today, but I couldn't resist the setup, man. See if we can hold. I'm not expecting the best price action for today either, so we'll see what happens. I did tell you guys yesterday that I was gonna get some more accounts, some more top steps. So this is a top step account that I'm working on right now. I didn't get that much for this week. I don't want to copy trade too much for this week, being all this news. So next week I'll get a couple more accounts, but for now, not that much. This is the current trade here. I'll just put this here. Right there. Like 13 contracts deep. Targeting this 1 to 2. 1 to 1 will go break even. So soon. Go break even soon. Hopefully. Let's not say soon, hopefully. But yeah. And that'll be the trade for the day. Hopefully we can just get this and we can get out of here and be done for today. But my bad guys. So I had a really busy morning. You can see my face is peeling. I don't know if you guys can see it. My face is like peeling and shit. I was at the beach this weekend. Was in the sun a little too long. My face got fucked up. But yeah, I came a little late this morning. I literally like got to the markets at probably like, I say like 9:20. So I was doing my bias and everything like that. As soon as the market opened, I had to take this trade. I could not wait. So that's why the stream started up a little bit later. We were supposed to start earlier, but I was kind of running late, so it's all good. At JPY. Let me manage this trade real quick, but I will go to Cat JPY on this other screen here and look at it for you. Hold on. Come on, Nas, I need this 1 to 1. Now, honestly, my entry was supposed to be right here. This happened so fast. Look at this. We have news today? I think we do. Fuck it. Let me see what the news is looking like. Today, oh, there's no news right now. On 45. Nah. 10 a.m. like 10 minutes. Now, because of the conditions of today and we have FOMC, I do not mind cutting this trade early. I will cut this trade early under certain circumstances. I'm watching those circumstances right now. I wasn't expecting to trade today, like I said, but the setup was good, so we took the entry. But I will cut this trade if I see that markets is just being messy today. All right, just letting you guys know. So if you see me close early, you know why. JPY, you said accumulation on what time frame, bro? Oh, okay, I see it. I see it, yeah. There was a entry around London session. Pretty nice. All right, let me go look at this real quick. What did we do? So, another reason why that I'm liable to cut this trade here is because we are reacting off this 4 hour right here. We're reacting off this 4 hour fair value gap here. I was expecting us to make it to the 1 hour here because we already tapped into the 4 hour on some candles early pre-market. So trying to see if we can get it to the 1 hour here. Like I said, we already swept London highs and we already swept London lows. So, and then we're about to inverse this. If we inverse that, this inversion that we mitigated multiple times, we inverse that, then most likely I'm just gonna close the trade and call it a day. I'll call it a little loss and be done with the day, honestly. It's FOMC, we're not gonna take too much chances today. There's definitely gonna be much better days to trade. So if the market doesn't give us what we're looking for, we're just not gonna take it. Yeah, we're pretty much ranging for the day already, it looks like. Not gonna be a control freak today. Just gonna trade what the market shows us. I'm gonna go check out this 5 minute real quick. Just long wick on the 5 minute. Some inversions here. We swept these highs. We got these inversions right here. Could go lower today. Yeah, so we're gonna get out right here. We're gonna get out right there. The market shoots back up, that's fine. Yeah, we're gonna get out right there. If we go back higher, then I'll look for an entry higher. If not, then we just don't get it. But I can see a short. The short might be the best opportunity. That's why I got out. We swept these highs right here. Like I said, we're already tapping inside of a 4 hour gap. So the shorts to the downside here, just delete this. That was a good buy from these lows. We just swept these highs. We're inside of a 4 hour gap. Do we have any other inversions that we can take? No. The inversion entry for the short was honestly right here. Right there. Gap there. Here's this gap here. If we inverse this gap here, I'll look for longs again. But if we don't, that's my only condition. See what ES is doing. ES hasn't even swept its lows yet. Equal lows down there. US 30 is shorting off underneath these lows. I think previous day lows might be our drawn liquidity. All right. Here's what I'm gonna do. I'm gonna let the markets move a little bit. I want to see what the price action is looking like. In the meantime, you did tell me to go look at CAD JPY. I will go look at that for you in a second. I don't want to put too much risk on the table today. I look at the markets. We've seen a setup. We executed. The setup is not giving us the volume that we want. We're seeing the market is going lower, so we got out of it. That might be the only trade I take today. I'll get back to it and check to see what we're doing. But yes, on CAD JPY, we do have this nice accumulation. We already swept Asia lows here. We already swept London lows. Nice accumulation towards the upside. Let's look at our structure real quick. Structure is looking kind of shaky, but we are bullish towards the upside here. I'll just draw that out for you. Boom, 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 boom. Right, so definitely bullish towards the upside here. Let's go to the 1 hour. Yeah, you're looking pretty good, man. Looking pretty good. I'd look for longs, honestly. Maybe wait for a pullback unless you got into this over here. I don't know. If you got into that, then you're already set. But if you didn't, honestly, I'd wait for longs. I'd wait to trade back into this right here. If not here, I'd like to see where our sweep is at. If you want to take a limit order, boom, there's your limit order. Off of this candle right here that is holding this gap. So either once the market pulls back into this 30-minute here, sometimes we'll just react off of the gap and then continue higher. But you can also just set a limit order here. So you can set a limit order here. If the market pulls back and completely fills the gap, then you can just take a trade off the accumulation. If not, then you would look for entries inside of here, right here. So depending on where the market retraces from, let's say the market retraces from right here, try your fibs out right there, back into at least discounted pricing. That's where you want to look for longs to take it higher. So wherever the market tops out at, draw your fibs, wait for discounted pricing at the 50%, and then you take more longs. The only other way that you can get into this is a reaccumulation, which would mean that the market has to create another manipulation, which means, let's say we do this, and then we manipulate these little lows right here, and then we go higher. That's your next manipulation. You can trade off of that, take the market higher like that. So yeah, that's what I would look for on CAJ, bro. So we are going short today. Probably not. But that's pretty much it. For those of you that are here, let me know if you have any charts or any questions that you want me to look at real quick. I wasn't even planning on trading today, but as soon as I logged in, like I said, I seen the setup, I had to execute. We had to execute. We always execute on our setups, man. But FOMC, my bias is bearish. I came back to my senses. I'm just gonna leave today alone. I'm just gonna leave today alone, man. It's okay. So yeah, at the moment we're currently down like what, 1% on the account. Well, 1% down on this one. So just bought this yesterday. Like I said, I am full reporting these accounts. Well, not full reporting, but I'm risking the maximum daily drawdown, which is 2%. So on this trade right here, I risk 2% to make 4%. It's aggressive, but these accounts are cheap, like $50, man. What's tomorrow? An FP. Oof, what a week. What a week. If y'all want, we can just chill here and backtest. That's what I'm gonna do instead of trading, to keep my just keep myself moving, because around this time I just be in trade. So I'm kind of just stuck right now what to do. So I'm gonna just go backtest real quick. Go backtest. One thing I do want to show you guys, I finished the last quarter backtest. Hold on, go pull this up. I'm gonna pull this up real quick and I'll show it to you guys. For this strategy right here, specifically this one, this is not a good representation. This is a terrible day. We had a bearish bias, but we did have a bullish setup here. But this setup is still a good setup. It's just bearish bias is overruled on that. So honestly, just to go on realistically with this trade here, we swept London lows here. So we swept London lows. Here's our inversion. So entry, perfect entry, right? Perfect entry. And we did not get that. It's supposed to be right here off of this candle. Stop loss underneath this candle here, right? We go break even at a 1-to-1, which you see, you would have been break even already, right? Unfortunately for me, since I got here to the markets late, I executed up here. So we did not get that break even yet. With stop loss underneath here, we did not get that break even yet, right? So, right, perfect entry would have been right there. Now for today, like I said, there was another opportunity. There was 2 opportunities today. There was a short, which is right here. Now, which one is high probability? The short. Why? Because we are inside of a 4-hour gap. So us sweeping these highs and then getting this inversion right here, as you can see right there. Ooh, that bullish candle here, I got inversed. So right here, this is the candle that closed outside of it. That would have been your short. Stop loss would have been above this high, covering this bearish gap. And then your take profit would have been a 1-to-2, which is down here. You didn't get a 1-to-1 just yet. Your 1-to-1 is right there. So pretty much kind of like the same trade. Like I said, the selling trade is the was the main bias. Once I seen that we swept these highs and we gave this inversion, that's why I was like, I was out of the trade. I was already done with the trade at that point. This already was over. So based on this strategy, right? And you guys can see it right here, this strategy right here. Based on that strategy, I'm gonna show you the results. I back tested last quarter, so 3 months. Pull that up. It's analytics for it. Once it pops up. And this is only for NAS, right? This is only for NAS that I was trading. All right, now I'm gonna just get these out of the way. All right, so FX replay. Boom. Here is the win rate, 64%. That's the win rate for that strategy that I just showed you guys, right? It's just this right here, right here. We're looking for liquidity sweeps and we're looking for inversions. So the 2 examples that I showed you is literally the setup. That's literally right here. Liquidity sweep underneath underneath London lows. Looking for the inversion, you take your trade after the inversion, you target a 1-to-2. Same thing for up here, right? Like I said, the short was the best opportunity, but today's FOMC, today's not the best representation of these trades. Okay, but that is the the core background, right? And this is like, if you want to copy this, this is the rules. All right, so boom, here's the analytics, 64% win rate. We trade at 9:30 to 12 o'clock. I don't trade after 12. So basically the AM session. But yeah, 64% win rate. Average R 1-to-3. I always go for a 1-to-2. That's the max RR. Here it gave me some these are, but you can see the strategy is pretty good. 44 wins, 24 losses, 6 wins. Consecutive wins is 6. Consecutive losses is 3. Average consecutive wins is around 2, which is good. Average consecutive losses was around 1.5. That means on average you won't get like 2 to 3 losing trades back to back. All right. It's all during New York session. Here's are the best days. Right. It looks like Friday and well, not Friday, but it looks like Wednesday. Ironically, Wednesday is supposed to be the best winning day, which is today, but it's FOMC. But ironically, Wednesday is the best day for this strategy. Second best day, you're looking at Tuesday and you're looking at Friday. Monday, which I already know is the worst day. Okay, Monday's usually slow. But so for this back test, I only did April, May, and June. So basically the last quarter. This is the most recent price action that I could get. I'm going to do January, February, March soon. And that's probably what I'm gonna start with. I'm gonna start with January. No, I'll start with March. I'm gonna start with March. We're gonna go backwards. But April, 11% gain. May, 17% gain. June, 12% gain. And then here's just basically that. May, April trades here, May here, and then you have June right there. Average trades a day is 1, trades per week is 5, and then trades per month is around 24. All right, so there's just the analytics for this strategy, and I'm going to back test like right now. So we're going to just do a live back testing session. Let me go ahead and notify Discord about that. See if they want to join in. So yeah, let's go on real quick. New session. Yo, that's 1 to 2. Halftime. That's the name of the strategy. Halftime. March. We're gonna go 25K. The account size really does not matter. And then these knives, we're gonna do March. Let's start on. We're gonna start on Monday. To 5. March to the 31st. Monday here. We're gonna go to right there. Yep, everything's set. Great session. Ooh, let's start this. All right, I'm gonna leave this here. Let me go check one last time before we lock into this. So yeah, pretty crappy day. That's fine. Yeah, okay, cool. I'm gonna close these out. Leave that. We're gonna close this out too. So tomorrow, you see this 700 here that is remaining. I'm gonna risk that whole 700 tomorrow. Up to like what, 48, 130. Yeah, I'm gonna risk that whole 700. All right. What time is it? It is. Market already passed the day. Hold on. Okay, you know what? There is news at 10 a.m. Fine. We'll deal with it. It is what it is. We'll deal with it. So, those are the back tests that I already did. Let's remove those. We're inside of a daily fair value gap. Daily fair value gap right here. And I'm gonna just keep this simple. I'll do this. Daily fair value gap here. Previous day lows is right here. Previous day lows right there. Previous day highs is up there. Previous day highs. Okay, we are going lower. We are bearish. Okay, our previous day highs, previous day lows. We're inside of a daily fair value gap. What else do we have? We're at 50%. We already swept these highs. Where's our open? Oh wow. Okay, there's our open. We're already sweeping both of our main liquidity pools, unfortunately. So both our main liquidity pools were delivering from this one up here. My side, let's go to the 1 hour real quick. We have a mitigation right there. 30 minutes already been mitigated here. There's another 30 minutes already been mitigated. Large candle there. Let's see, we have a 15-minute fair value gap sitting up there. 2-minute fair value gap sitting there. We're mitigating a 5-minute gap right now. Got a 5-minute gap here. Do we have any inversions? Okay. All right, play this forward. Five-minute. We're underneath these lows here. We have a 15-minute right there. Then we have a 15-minute here. Remember, our bias is bearish. We're inside of a daily fair value gap. We're in 50% premium up here, and we're already delivering from these liquidity. So if we tap into this 15-minute, give inversion, that's our entry. Let's go to the 2-minute here. We have a 2-minute candle. We have to inverse all of that there. A 2-minute time frame, or just 1-minute time frame, doesn't really matter. We don't inverse it and we go higher, that's fine. We have another 15-minute right there. We're already late to this day, so we're just playing catch up since the back test started super late. Okay. A minute. I mean, it created this inversion. That's not what I wanted to see. A minute mitigated already. All right, consolidating day. Cool. That's fine. No trade. Next day. So we end up going down. Like I said, our bias was bearish. We end up going down. We stopped trading at 12. Let's see, what else do we have? So boom, we know that the trend is obviously bearish. So we're going to be looking for shorts. Previous day highs, we're underneath previous day lows. We've mitigated 30-minute fair value gap here. We took out Asian highs. We have London highs sitting up here. So we have some nice liquidity above these highs. Right there. Boom. 930. Swooping these lows, liquidity up here. Mitigating a 30-minute right there. 1 hour here. Okay, so depending on how we react off of this gap right here is going to tell me whether we're going higher or lower. And then we could have a sweep of these lows right there. So that's a 15-minute unfilled gap. If the market, since we are bearish, all right, boom, 50% from this high to this low, sitting right there. Boom, market comes in here, give an inversion, we'll take the shorts lower. That is the bias. If we blow past this gap here, then I'm gonna expect this to come up here. Latest 4, we have filled gaps. Okay, so we come down, we sweep the lows immediately. Can't take a trade. There's no inversions here, unfortunately. Come back higher. Have this 1 minute. Sitting down there. Come on. Oh, that's crazy. All right, so we're gonna execute this. It's gonna be a terrible stop loss, but we're gonna execute it. Let's see. We're just gonna put it above the inversion. All right, mitigate the 15-minute. Maybe our order. I'm gonna risk 1%, which is about 250 on that. Boom, we're gonna place that. Let me see. Let me go to the left real quick. I want to see what's over here. We have something that we could target. Fuck. We have a daily gap right there. Hopefully we blow past that. But that is the trade. We're just gonna take the trade though. We can't control how far the candle closes outside of the gap. I don't put like a sell stop here. Reason why is because you'll have this right here where the market will wick you in. So I'd be in a short and then we'd go. The market has to close outside of the gap for us to close the gap. We can wick as much times as we want outside of the gap, but if it doesn't close outside the gap is still valid. So in order for the inversion to be confirmed, we need to close. So this is the candle that closes right here. Okay, we took an L on that trade right there. So we're going to put stop loss. In 15-minute. That value gap there. Inversion. Right there. Our bias was bearish. Version, download that, put that in, make a new folder for that. Okay. Save, we delete that. We got one more trade opportunity for the day. So let's see what the market does. Of course, we continue right back down. Okay. Once we confirm this inversion again, we are going to take the short again. Stop loss is going to be above this high. There, covering that fair value gap. I'm gonna take this lower. I don't even have the chat up for you guys, but I'm tripping. Check for SMTs. Unfortunately with FX replay the way it is, I can't. I think it would be best to do what is it called? I think it would be best to use trading view when it comes to backtesting like this. Honestly, I was thinking about that too. But even in my trading now, SMTs is not like the end all be all for me, honestly. SMTs are nice, but they're not like the, you know, the I don't need an SMT. We're break even right here. Probably gonna get break even, but it's cool. Oh, no. Don't get break even. And take profit. All right, so we took a loss on the first one. Market wanted to be yeah. We took a loss on the first inversion here. Right there. Boom, boom, boom. But you guys can see how we stuck to our bias though, right? Liquidity is nice. It's important to respect liquidity, but you have to make it make sense. Okay, make it make sense. Why would the market want to come up here if we can't get past this 15-minute gap, right? So that was the conditional area here for that trade. Okay, 1 minute inversion there. We took a loss there. We got 2 more. I'll just delete this. Got that inversion right there. 1 minute inversion there. And we got another 1 minute inversion right here. Okay. Mitigation. That's terrible spelling. So yeah, those results, well, yeah, those analytics that I showed you guys with the 64% win rate and all those trades is literally this is literally all I was doing right here. Looking for either liquidity sweeps or mitigating a higher time frame gap, premium versus discount, and then looking for the inversion as your entry. That's pretty much it. Go to the next day. Don't care about this day anymore. What did the market do? So every day we just redo, we reset, look at the same stuff. What liquidity points has been taken? What liquidity points is left over? Where are we at? What gaps are we respecting? I can see that we are respecting this daily gap right here. That's the first thing I noticed so far. It's good to know. Boom, boom, boom. We have London highs is left over, so that could be potentially our target for the day. We'll see. The market is still bearish. We know that off the 1 hour time frame. From this high right here, we have this low. We came into the 50%, so honestly we can go lower from here, or we can come and we can retrace a little bit more. We'll see what happens. All right, but our main bias is to look for shorts. Okay, we already swept London lows, Asian lows. I am tripping. Let's go to the 30 minutes, see if we have any gaps that we want to see. Have a small gap right here. The gap sizes does not matter, so any gap is a gap. Let's go to the 15 minute. There's no 15 minutes, so that 30 minute is really all we're working with. Yeah, that small 30 minutes is all we're working with. All right, we have news at 10 a.m. Gonna be cautious about that. Now I'm really debating whether I want to just say fuck news at 10 a.m. and just trade, because yesterday I missed like the best selling opportunity because of that. I could have avoided a whole losing day if I would have just executed my first short that I seen, but I was waiting for news. So that's going to be something that I'm going to determine as we do this. Disclaimer, I've only been trading like this for like 2 months. You guys know that I used to just trade Forex, and I have a whole Forex like strategy and everything like that. So I've only been studying this for like 2 months. I'm building data and everything like that. And that's why I'm so aggressive with these accounts. I really don't care, because this is the testing phase. This is like where I build the confidence in the data behind it. So that's why when I see these, and you see like yesterday I just blew like a 50K account, right? And I just bought another one, right? That's just boom. And I'm risking a lot. Reason why is because I want to see like how well does this work? How like I want to trade the strategy exactly. Like no emotions, no nothing, just trade it. So that's kind of like what I'm doing here with that. And let's just see what's going on today. Just stop the yapping. Go back. Trading View will let me. I want to keep this here. That's previous day lows. I forgot to do that. Always mark out your previous day lows and previous day highs. All right. Market is already trading lower. Market just opened. We inversed this bullish gap right here off the 5 minutes. So that is just signaling me that we're probably going to continue going lower, but let's see. Okay. Yeah. All right. So we got this huge push to the downside. Let's see. Market's still pushing. We mitigate. Okay. Okay. We retrace. 5 minute. Condition. Another condition. You see these inversions right here? Right there? We only take inversions when we are sweeping liquidity or we are mitigating a higher time frame gap. So if this market would have tapped into here and then we would have gave this inversion, I would have took the trade, but we did not tap into anything. We do not take the inversion. You don't just take any inversion you see. Okay. Even though it did work out, but the market is bearish. So just don't feed into it. We need to see a fair value gap or something. Okay, so boom, 10 a.m. just came. We shot up. Did we sweep anything? Did we take out anything? Took out these little lows right here. What time was this? This was yesterday. I'll keep that in mind. We swept these. We swept these twice actually. And 1 minute right here. So we have a 1 minute there. Stay on the 5 minute. I'm gonna keep this here. Tapping into the 5 minute right there. No inversions inside this candle. If 5 minute gets inverse, we take the shorts. Time is it? It is 10:15. 5 minute. All right, we're taking the shorts. 1, 2, 3. We're gonna cover this 5 minute gap. It's gonna be a big stop loss, but it's okay. We're gonna target previous day lows. Oop, for 1 to 2. That's fine. Go break even at a 1 to 1. Might take an L. Take an L, that's fine. All right, we ended up taking L for the day. Fine, that's cool. So what did the market do? Came back, we tapped into this daily fair value gap here. And honestly, I should have just closed the trade at that point, but it's okay. Yeah, came back, tapped into the daily fair value gap, took an L. That's all right. So what do we have? We were mitigating this 30-minute right here. That's why we took the shorts. Mitigating this small 30-minute gap. Small 30-minute gap. We had a 5-minute inversion. Five-minute inversion right there. We missed that by a couple of points. Got stopped out. Was stopped out. Our bias was bearish. Move on to the next day. Okay, so we ended up coming higher. We took out London session highs, and now we're trading back to the downside. Okay, so still bearish. We are still bearish. Daily fair value gap. We have a previous day low sitting right there. Day low sitting right there. Bearish. We're disrespecting bullish gaps. And here our bias is to go lower. We're not sweeping in liquidity. Not yet, at least. Yeah, we didn't sweep those lows. Yeah, well, that's amazing. Honestly, I deserve that L. Because we didn't close. All right, I'm gonna put that there. Now I wasn't trading like this in March, by the way, so I'm not sure what this price action is like. I just know we were going down from like the tariffs and stuff like that. Mitigating 1 hour fair value gap, trading error by the trader. And this is a good example why we wait for the gap to close. So use this as a lesson. Trading error by the trader. All right. Primary gap is mitigated here. We have another one like sitting up here somewhere. Okay, we're gonna take another short. 5 minute done. We're still mitigating this. We have this 1 minute right there. Just inversed. Yeah, we're gonna take another short. Stop loss at the high. One to two. On the ones, break even on there. See if we even get the 1-to-1. We take 2 L's, we're done trading for the day, by the way. Break even. And we get break even. Great. Mitigate the 5 minute, got the 1 minute inversion here. So we are respecting 5 minute gaps. Let's see if we want to feed into that. We have a 1 minute version here, 1 minute version. Let's see, we're tapping off a daily fair value gap, our drawing liquidity. We have previous day lows here, and then we have London highs. We could go either way. Honestly, we could go either way. But what is our bias? Bearish. So I'm not gonna take the longs. Yeah. Yep. Yes, shit like this is gonna happen. You're gonna get break even. The market's gonna go in your way. But that was the perfect break even for this, because this gap right here, that 5 minute mitigation right there, honestly could have caused us to go up here. So it's kind of like a protection thing. It does get annoying when you get break even on easy trades like that, but it is what it is. Put the 1-to-1 right there. I think this is like the first week. I'm gonna finish the first week, then I'm gonna stop right there. Go back and check the markets. Everybody up here. Inversion. All right, let me do Friday real quick. Bias is bearish. Bias is bearish. We swept both highs. We're delivering from those highs. So bias is definitely bearish. This is funny to see. I'm gonna delete all of this here. What is this? That's 8:30. So we have data highs right here. So that's a nice liquidity point. These highs already been swept. What price action is this? This is NFP, so ironic. We have NFP this week. 5 minute. $15-minute, 30-minute. All right. Now we have these as previous day lows right here. It's great. Minute inversion, previous day lows were bearish. Let's see what happens here. Okay, we're going higher first, come down. It's doing its thing. And you know what? If we go up here and take out these highs, that'll actually be perfect. Five minute. Markets pump faking. Got the inversion here. Now we didn't sweep any liquidity. We're not tapping into anything, so we'll trade. But look what we're doing. We are mitigating that 5 minute right there. I hate when the market's in between two liquidity points. Literally, we could go, but bearish is our bias, so we're not going to just jump into this. Okay, here's what we can do though. This is supporting our bias. Hold on. Okay. And we're gonna shoot for this. Highs, target previous day lows, and all this liquidity just sitting underneath here. Inversions right here. One-to-one, break even. Target previous day lows. All right. Why did we take this trade? Why did we take the bearish candle? Just put this here. Market's bearish, right? Bias is bearish. Just put this up here. Bearish. We're only looking for shorting opportunities. We had equal lows down here, equal lows and previous day lows. All right, I'm gonna stop right there for now. Ooh. So it looks like our trade that we closed earlier is still active. I'm not in it. I closed it on every account. So, but it looks like we're still would have been a profitable trade. Super London lows. Only problem is we have too much stacked against us. We have bearish, push to the downside. We are inside of 50%. Well, we're getting it to 50%. Actually, we're not inside of 50%. That's crazy. Okay. Gives another reason why we could look for longs. That's one extra confluence to the longs to get into 50%. We're reacting off a 4 hour though. Have a bearish movement to the downside though. Pretty cool. 15-minute inversion here. Yeah, 15-minute inversion right there. 5 minutes too. It's not bad. It's actually not bad. 5-minute inversion too. Down here. So yeah, look at that. Our long trade for the day actually is playing out. Well, that's not even where we got in at, so let's not even put that there. We got it like right here. Terrible entry, but that's another reason why I closed it too. My entry just wasn't there. The entry and making sure you get in like right after the inversion is really important because that determines how far you're gonna go for your risk to reward. I'm not expecting this market to really like fly up here, so that take profit is just not the best take profit. That's cool to see that it played out. For those of you that are here, you have any questions, anything like that, that's it for me on the charts. I'm done. I'm gonna be done for the day. I'm gonna enjoy the rest of my day, get off the charts. I'll probably do some more back testing personally, but that's it. That's it for me. If you have any questions, please let me know. I'll be here tomorrow. Try to trade tomorrow again. This week is not an accurate representation. Okay, I'm gonna let you guys know right now. This is literally like the worst week. This is gonna be the worst week. I already know it. There's too much news. There's too much going on. Price action is not going to be the best. Okay. It's a terrible entry and stop loss for our longs. Yeah, terrible entry. Or would you have put your stop loss here? Nah, we're not gonna trade today, bro. Nah, we're not gonna trade FOMC. I did come in here and I seen a setup, so I did execute just because in my head it was like, damn, this is a nice setup, A+ setup. I'm gonna execute it. So I did execute it, but then I looked at it again and I'm looking at all the confluences, and I remember today was FOMC, so I'm like, you know what? I'm gonna just close the trade and get out and just be done for the day. And I was okay with that. But normally, no, I don't trade these days. I just couldn't resist the setup today. But yeah, we go again tomorrow, brother. You said terrible entry and stop loss. Where at? Oh, you're talking about this. You're talking about this. I know exactly what you're talking about. Yeah. So look, I'm not gonna lie to you. I came to the markets late, so I didn't even have time to really do my daily bias. And that's another reason why I closed the trade. I don't like the days that I come into the market late and I like rush into my daily bias. So I don't like those days, even though it was a nice trade and everything, whatever. I just don't like rushing into like my daily bias. I don't like rushing into the market. So literally, as soon as I started looking at the market, we were already like sweeping London lows because market just opened. Market just opened. We're literally like sweeping London lows. So my mind, I'm looking at this. I'm like, okay, we're sweeping London lows. We have an inversion right here. Then immediately we just run back up. 5 minutes later, we get the inversion. I'm like, oh shit, we got the inversion. By that time, the next candle already printed. So I'm like, oh shit, let's just hop into the trade. It ended up working out because it is an A+ setup. Even though we do have bearish confluences against us, it is still a mechanical A+ setup, right? The model itself just works. Liquidity sweep plus inversion, the model just works, right? Bias does add to the win rate a lot, so bias is obviously important. You don't want to just trade every liquidity sweep. You don't want to just trade everything. Bias is important. Okay, so we just got out. It's cool. Market ended up going higher. That's fine. It's FOMC. I'm okay with today. All right. You said wouldn't have taken it if I missed it. You wouldn't have taken it if you missed it. Yeah. Yeah. No, I feel that. Shit, looking at it, I should have just committed to it since I took it already. Yeah, we should just committed to it, man. I know, brother. I know. But yeah, I should just committed to it. But it's cool. It is what it is. We come again tomorrow. Trade again tomorrow. That's the motto. Come back the next day. I think this is the worst week I could have started coming back and live trading again. I already knew what this week was gonna be, honestly. As soon as I looked at the news and I seen how much news we have FOMC and NFP, PCE, everything on the same week. I just knew it. I knew it was gonna be like this. But yeah, I appreciate you guys rocking with me. Appreciate you guys being here, honestly, even though we taking some L's this week, but it's all good. Let's go turn around next week when the market actually is good. Tomorrow we're gonna trade. Definitely trading tomorrow. I already know that. We have news at 8:30, but that's 8:30. That has nothing to do with 9:30 open. If the only problem is we could have no volume if the news is really like crazy, but news has really been annoying this week because the market really hasn't been doing anything to the news. Like yesterday, well, the other day before that, we didn't even do anything, right? So we're still mitigating this 4 hour right here. Yeah, let's see what Powell does. Let's see what FOMC does later. Yeah, that's pretty much it, man. Appreciate you guys for being here. I might go back test. I might go back to sleep. I don't know yet. Might go get some breakfast. I don't know. What I have to do though is journal this trade. So let me journal this real quick. Did I journal this earlier? Let me see. Not even sure. Nah, I didn't journal this. Yeah, look, we just got the 1-to-1. And you see the difference, bro? We just got our 1-to-1 versus like entering right here in your stop loss at the same spot. Oof. Actually, I would have took the 1-to-1. I think the second one is more painful. Yeah. No, incorrect. Incorrect. Should I continue the backtesting session a little bit more? I'm still thinking about backtesting. I've been on like a backtesting frenzy. I'm just trying to build as much data as possible. Let's try to do like one more week. Yeah, let's try to do like one more week. I'll keep going. That's probably what I was gonna do anyways. Before I buy like 5 more accounts. Cause honestly, I just want to copy trade the accounts. I don't want to like trade them like one by one. I don't want to pass them one by one. I'd rather get like maybe like 2 or 3 more accounts and just copy trade all of them and pass them all at the same time. Not this week though. Not this week. But yeah, like you were saying, the only thing I don't like about FX replays, I can't really get the SMT, but it's cool. It's cool. We'll just not use that today, and we'll just see what we can get. Previous day highs, previous day lows. We're still bearish. We have session liquidity up here. We have both highs remaining. Our gap is already filled, so price is delivering from this. What is this? It's Friday, it's Monday. New week opening gap right here. Previous day lows is going to be the target. If we sweep previous day lows, we'll look for inversions to the upside. Just getting back into this, maybe targeting these highs right here, but it looks like we're just going to come straight down to previous day lows. If we can get a sell into previous day lows, that'd be even better. 9:30 open. Let's see what gaps that we have. Where market is currently respecting a small 30-minute gap right here. Expecting 30-minute gap. We respected this gap, so we're expecting bearish gaps. We're definitely bearish. I was respecting. All right. See what happens when this market opens. Do we have anything else that we can come into? This 15-minute right here as well. 30-minute. Back in the 30-minute, we're shooting down. Nothing we can do. We're not sweeping in liquidity. We're not taking anything. All right, here's our sweep. Now, we are bearish. So, see where our next areas of liquidity can be. Let's go to the daily time frame. Ooh, we have all of these lows right here. Okay, these are a nice liquidity pool. All right, so we have a bearish target right there. This is just in case the market does continue going lower. In order for us to sell this, we need a mitigation of a bearish gap or something. In order to buy this, we need to inverse this gap right here. Market reacts off the gap, so that gap has already been mitigated. Here is our next inversion. Let's go to the 5-minute. Always got to make sure we're checking these time frames here, just in case we get a fair value gap like this 30-minute right here. Like I said, we're bearish, so we're not going to chase the market. We need to get an entry somewhere. So we have another 5-minute. Okay, 5-minute is going to be our inversion now. We don't care about the 1-minute no more. Boom. That 5-minute is going to be our inversion. going lower. Did we tap into the 5 minute? Even better. Yeah. Oh, that was a sell inversion right here that we missed out on. It's cool. Then I sweep the lows. I don't like that. Sweep the lows, okay. I think we just go down today. What time is this? 10:40. Small inversion right here. Yeah, we just go down today. So we missed the sell. The sell was right here. Missed it. What time is it? It's 10:46. We still got some time to go, but we missed the sell off this 5 minute right here. I was playing a little too fast. Right there. It's just short right here. Highs, and we're about to hit take profit right now. So missed that. Off of that 5 minute here. I gotta get better at doing that because when we're sweeping liquidity, I'm trying to focus on multiple things at once. Inversion. A lot of inversions. Not falling for the inversions because the market swept liquidity multiple times, like right here. At this point here, we need a break of something. But we're just gonna continue going lower, and it's okay. 10:50. Okay, we're pulling back again. Okay, you have a second chance. 5 minute gap. Inversion, small inversion there. Small inversion. Market wants to inverse the 5 minute gap. And you know what? If we do inverse this 5 minute gap here, where are we at? Where is our liquidity points? Oh. Okay. And we do inverse the 5 minute. All right, let me check the higher time frames before we do this. We got to see if it's even worth the trade. If we execute right here off this to the 30 minute gap, stop loss at the low, we get a 1-to-1. Okay, we're gonna go for it. We're gonna go for it. 2 right here. Selling off aggressively. What day is this? It's Monday. Place the order. We're gonna go for it. An inversion. Yep, inversion confirmed. Probably gonna take an L, but it's all right. We missed a short. And at this point, I don't want to short the market anymore, so we'll just wait for it. Where's the 1-to-1? 1-to-1 lines up perfectly. Break even. All right. Okay, where's the 5 minute? 5 minute just got inversed. We're taking the shorts. Okay, we're gonna take this 5 minute inversion right here. We just got break even, so we're gonna take this 5 minute inversion. Right there. 1, 2, 3. 2, 3. Yeah, this is the candle actually. It's perfect actually. So we got break even on the longs. Take the shorts. Stop loss above this gap. And let's go for the shorts. Okay, trace, where's our 1-to-1? So wrong there. Ah, come on. Come on. Market just likes playing around. Okay. We're so late into these sessions right now. All right, take profit on the short, and we got break even on longs. All right. Now, I would say for just like to be like as highly profitable as possible. Let me just say this: as highly profitable as possible. To be honest, you don't have to take, if you want to be conservative, you don't have to take this long right here. You don't have to take this 5-minute inversion. You could honestly just wait for us to get into this 30-minute right here and look for the shorts. That's going to be the highest probability trade. This here is a low probability trade because we are going against the obvious trend. Okay, the only reason why I went against it is because we're still underneath these liquidity points right here. And the 5-minute was the only inversion. Well, the 5-minute gap was the only gap here that could potentially hold us back until we got to the 30-minute. Okay, so that's why when I seen that, if we took the trade here, we will break even at the 30-minute, I was willing to take it because we at least would have gotten break even, which we did got break even. Once we hit the 30-minute, you can see we rejected off of it, and then we gave the actual move after this 5-minute inversion here. Reason why we didn't take the 1-minute inversions as you see here is because you want to take the biggest fair value gap, which is the 5-minute right here. So you want to wait for that, take the short, see the market gets TP. Let me go ahead and journal that real quick, and then we'll move on to the next day. Yeah, strategy is pretty simple. It's just you have to get your bias correctly, and it's just sticking to the bias. Right, these type of low probability trades, you can avoid those. But for the purpose of backtesting, I want to take it every single time because I want to backtest the mechanical part of this strategy too, and I just want to see if it works mechanically, like bias or no bias. Right, if we're sweeping liquidity, we get the inversion, will the trade still work going against the overall bias? Right, I want to see how many times it works and how many times it doesn't work. So I'm just taking every single time I see the setup, I'm just trying to get in. We didn't take the obvious short here. We would have been done after this, but it's all right. There's gonna be more opportunities. Metagame 30 minutes. Let me just put this here. Zoom this out a little bit. trying to get all of this in. Save. Okay, cool. Next day, delete all of this. Don't care about what's happening for the remainder of the day. Once you hit take profit, just get out. Leave the market alone. Next day, where's our liquidity points? Get this out of here. Let's get this out of here. Like that. Previous day highs. We're already sweeping previous day lows. It's good to know. Boom, boom, boom. Let's go to the 1 hour, see what gaps we have. Our previous day highs up here with all this liquidity. Respected this 30-minute. Leave that for now. We already took our previous day lows. So our liquidity point is going to be sitting right here. I want to take a reversal trade. It needs to make a good sweep in the high time frame. Can you show me an example of that? Give me an example. 30 minutes, already been mitigated here. Respecting bearish gaps. We do have this right here. Because we have a simple entry model. Either we're mitigating, either we're sweeping liquidity. The A+ setup is sweeping liquidity and we're tapping into a higher time frame fair value gap. That is the A++ setup. All right, but to be honest, if we're just sweeping liquidity and we get the inversion, that's still like, I'll say that's A-, but A+ would be like sweeping liquidity and mitigating a higher time frame fair value gap. All right, we're bearish. Even though we're bearish, we can still get a retracement back up here, at least to this 1 hour here. It would make sense because we can mitigate right here and get to equilibrium. Once we get to equilibrium, we mitigate this 1 hour. We'll look for a short down here targeting this. That's the current thing I'm looking for. Now, if we just go lower here, right, we do have London lows right here. So London lows could give us that. I didn't even notice that. I thought London lows was already taken out. Okay, we have London lows right here. So London lows could give us that intermediate sweep to take us up here, and then we go lower, right? If we blow past London lows and we have a fair value gap, hold on, we might have to take longs. Yeah, speaking of A setup, this would be it right here. But say we get this sweep, we get the inversion, we're gonna take it to this. But if we just blow past this liquidity and everything like that, then I'm gonna be looking for shorts to take us lower. Let's see, let's go. Where's the open at? Open is right there. Okay. Go to the 5 minute real quick, just looking around. 15-minute. So we have a 15-minute gap after we swept these highs. Okay. See what happens. Okay, we tap into here. Tap into both of them. 1, 2, 3 gaps here. Let's check the 5 minute again. Crazy closure to the upside. Okay. So yeah, we're gonna have to execute this. Super liquidity, we're mitigating a 1 hour gap. We have no choice but to execute this, unfortunately. Stop loss is going to go underneath this low right here. We don't have any fair value gaps yet, so I'm just gonna put it underneath this low here. Potentially this will be a fair value gap. And we'll see if we can get up here. We'll get a 1-to-1. That'll be perfect, at least up here. Like I said, I don't like this 15-minute that's sitting up here, but it's okay. We'll see what happens when it gets there. 1-to-2 is going to be actually before we get to the 1 hour candle. Let's place this order. We do know that We are bearish overall, so we'll see what happens. Yeah, that's gonna be the trade. Okay, so we get the 1-to-1 right there. Break even now. And we're looking for the 1-to-2, which is our take profit, and then we'll be done. If we get there. If we don't, that's hilarious. So we get break even. Pretty sure we're gonna go higher now, right? No. Okay. Get break even, right? At these highs, we sweep these highs. See if we get this inversion here. Even better. Looking for shorts. We're going to take the shorts. Okay, so we sweep these highs here 2 times. Sweep these highs here. Oh, we actually have a 5-minute right there. That's just chilling. 3 1 minute gap. Nah, we already got this mitigation right here. Did we? Yeah, we already got the mitigation right there. So 5-minute. Oh, this 5 minutes gonna be I knew it. That's the 5-minute closure right there. Okay. We have to at least cover this gap. Close your eyes. The stop loss is gonna be crazy. Targeting Asian session lows. Yeah, we got break even like crazy on that one. All right, we have Asian lows sitting down here. Whew. Oh my gosh. That's not even worth it, is it? It's not even worth it. I'll wait for another gap or something. It's not even worth it, man. No, we would have got stopped out. Oh, no. We're chilling. Yeah, we tap into here. If this candle wasn't so fat, we would have probably hit TP targeting these highs. But that was the closure candle above these. That's the trade. We're getting here. What is this? It's a 15-minute. Did we inverse this? Okay. We didn't even inverse this 15-minute. Okay. All right. That's good to see. I will take the trade once we get this inversion right here. If we get this inversion. There's the inversion. Now this trade I will take. It's probably still going to be a fat stop loss, but it's okay. Fair value gap. At least we'll get our 1-to-2. Boom. All right, come on, FX replay lock in. Where's our 1-to-1? Right there. Just need a break even market. We just need a break even. Appreciate it. Thank you. All right, now the rest is out of our hands. No. I knew this was gonna happen. Let's see. Is there something else we can get into? Hold on. 5-minute here. 15-minute. No, 30-minute. Nope. Version 5-minute. Is there something else we can get into? It's 11. So we're still mitigating this 1 hour. It seems like we don't want to go for Asian lows. Let me delete this. This was already break even, so let me delete it. Either we stay right here for the whole day or we actually go higher. But it's about to be 12 o'clock. So trading day is over at 12. Next day. Break even on that day. And we actually do end up going higher. So let me get this out of the way. To get this out of the way, let's get all of this out of the way. That's from the previous day. Our liquidity target is going to be the lows. Can you check left side on the higher time frame? I got you. What do you need on the higher time frame on the left side, bro? All of this price action here is from 2024. And honestly, I'm gonna be honest with you, we already know that this market is going to go lower all the way to here. Sucks, but we already know that. So now what I don't know is I don't know what actually happened inside of here. Okay, that's what I don't know. I wasn't trading like this at this time. So I wasn't trading. I was still trading Forex. I was still doing that around March. So I don't know how the price action actually went lower. I know we went lower though, but I don't know how we went lower. So all of this is kind of like new and fresh to me, except for the fact that I know that we're going lower. But I'm not gonna use that and cheat and try to short everything. I want to actually trade the model the way it's supposed to be traded. You're talking about which liquidity? Well, what I can see is that we're tapping into a daily fair value gap. That's the first thing I can see. And I can also see that we're tapping into a bearish fair value gap right here on the daily time frame. And we're also tapping into a 1 hour right there. Tapping into a 1 hour there. And we finally got back to the 50%, which is what we were looking for. We could go a little bit deeper up here into the 70 and everything like that. We're swinging higher, 30-minute gaps, whatever you're expecting. So far we're disrespecting these bearish gaps here. We have 1 hour here. We're trading back into the 50% now. So we got to be cautious. We might short off today. We have a 1 hour right here. Let's see what else we have. All right, I want to see how the market opens. I want to see what happens. We have a 1 hour and a 30-minute gap here. Your trend is bullish. Where? Where is your trend bullish, bro? Your trend is not bullish. Your trend is not bullish. That is incorrect, brother. This is not a bullish trend. Yeah, I know you're looking at the daily time frame here. I know you're looking at this daily time frame, but you're not trading daily time frame. We're not trading daily time frame, right? We're not going to be like, okay, yeah, so we're from this low to this high. So once we get to here, we're going to be looking for it. No. You want to trade what's going on right now. Because you know what? You know what happened? You know what happened? The market went all the way down and swept these lows. Why? Because why did that happen? Because this price action here is from July 2024 all the way up to here. This is the 2024 economy. You know what happened here in 2025? Trump became president. So this is a whole different economy at this point right here. Tariffs, a whole bunch of other shit was happening around this time. So when stuff like that happens, you have to trade this current trend, okay? And it's good to respect the daily time frame. I do go on a daily time frame. The only reason I go on a daily time frame is to look for my major areas like this area right here, daily fair value gap. So now that I know that we are tapping into a daily fair value gap, honestly, I wish I would have known that yesterday, the day before that. I should have looked at that the day before. But Now that we're tapping into a daily fair value gap, well, we were still taking longs. So we tried, actually. We actually tried. We actually did try to take longs either way. So now that we're tapping on daily fair value gap, I know this market can still go higher if we're going to continue respecting these gaps to the upside, right? That's what we're going to pay attention to. But I'm not going to rule out the fact that this market can short off. And if I do see the short, I'm going to take it, right? Because that is the overall trend of the last, since February, we've been trending down, basically. So why go against it? If you see it, take it. Now, doesn't mean we can't take longs too, so. Yeah, but also this is a mechanical model, so I am applying bias to this, and I'm applying bias to where it makes sense. But like I said, like sometimes you'll see the setup and it just works without any bias, without anything else. It'll just work. Okay, so just sometimes it just fuck the bias. like honestly, when you see an A+ setup and it's just like, man, let's see what happens here though. I want to see what this market does. What are we going to do? We have a 15-minute fair value gap here. So in this case right here, if we respect this fair value gap, let's say we come here, respect this fair value gap, and I see that we're going higher and I see inversions, I'm going to take us higher to sweep these highs. If we don't respect this fair value gap 15-minute, I'm going to take us lower to target this and to target these lows. So that is going to be the mindset and condition of today. Okay. And we're also mitigating this 1 hour gap right here. So that's something to look at as well. So we trade into the 15-minute. What do? We have that, this, into the 15-minute, go to the 5-minute real quick. Giving the market time to breathe. 15-minute here. Okay. Hour mitigation. Time is it? 15 minutes. So 15-minute is closing downwards. So today we're probably gonna go down. 15-minute. Still respecting it. See if we can get like a 5-minute inversion or something. Respected the 15-minute here. We are pushing higher. Pushing higher again. Okay, I think I'm gonna get what I'm looking for. Okay. Yep. 5-minute gap right here. Okay, so today we're kind of conflicting, right? We are 1 hour gap here that's pushing us lower. We have a 15-minute gap here that's keeping us higher. The 1 hour is obviously more is a higher time frame, so that's going to be more like stronger than this 15-minute, right? So that's why I'm kind of just looking at this 5-minute here. I want to see if that'll give us some bearish pushes. If it does, we'll probably just look for shorts and target down here and these lows. Also, I think we have traded back into 50%, so that's why I am also leaning bearish from this high here all the way to this swing low. See, we come right dead center into 50%, so we did hit equilibrium. That could be something as well that is applying to our bearish. So we just have a lot of bearish confluences. The trend is bearish. We have a 1 hour bearish fair value gap here, and we're inside of that equilibrium. So that's why I'm even looking at this here, at this 5-minute. Get the inversion. Okay, 5-minute mitigation. We got that inversion. We're gonna go for this here. It's gonna be an aggressive short. We get a 1-to-1 at this gap, so that's great. We get at least a break even there. We're gonna take the shorts that way. Ooh. Whew. This is one of those days where prayer comes in handy. Cello knows exactly what I'm talking about. It's one of those days where prayer comes in mighty handy. We might get break even though, we'll see. Metagain this 1 hour. This might give us a small pushback to the upside, which might get us break even. No, take profit. Okay. Man, imagine going through this in real life, in real time, real day. Yeah, stop loss didn't hit, but it's scary to see things like that, man. That's why I don't like having like really aggressive stop losses like this. I try to be like respectable with the stop losses, but in this case right here, since that is our mitigation, that is definitely where our stop loss has to be. Could probably finesse it a little bit, leave it above the high, just like, you know, extra couple of ticks above the high just to be conservative. But sometimes you will just get stopped out like this and the market will go in your direction. It's very sad, it's unfortunate, but it happens. Okay, this trade was pure just bias, so I'm gonna have to zoom out a little bit more. Okay. Terrible spelling. All right, hold on. I'm taking a little intermission. I'll text my girl before she gets mad. But anyway, so far, so what do you guys think about the strategy? What do you guys liking? I'm gonna just go to the analytics so far. So far, okay. All right, we have a 72% win rate so far. One thing I don't like about FX replay as well is it doesn't get the break evens correctly. So most of the time I'll probably have to go in here and really get the actual win rate for this, like, you know, with the break evens and everything like that. But so far it's looking good. So let me know what questions you guys have. What do you think? What can we improve? Right? What can we improve in the strategy if we do have anything that we do need to improve, or just basically what you see? Oh no, it's definitely profitable. Some days what I do see is that you can have like conflicting conflicting confluences. So usually what I do in those days is I just go with like with the side that has the most confluences. Like in this day right here, the reason why we just started disregarding the 15-minute is because we had so much bearish confluences. We're already trending bearish. We have a 1 hour bearish fair value gap that we're respecting. We're at the 50%, we're at equilibrium. And then we have drawn liquidity here at these lows, right? We have London lows that still hasn't been taken. So it was just a lot rooting for us to go lower. So in those cases right there, that's where you kind of would just want to like look at everything and make sure that you're on the right side with the most confluences. And then the entry is always the same. You're going to be either looking for a mitigation of a gap, and you're going to look for the inversion, right? If there's no inversion after the mitigation, then there's just no entry. So you're always going to enter after an inversion. And to look for an inversion, you need to have a gap, right? In this case right here, the 5-minute was our gap that we were looking for us to mitigate right here. After mitigating that gap, you can see we have that 1-minute bullish fair value gap that got into that bearish. Boom. Once we inverse that and we close, that's your entry. Stop loss goes to this high. Now, in other cases here, stop loss is really dependent on what type of trade you take. If you're taking a mitigation like this, boom, and you get the inversion, your stop loss is always going to go above the high of the mitigation. If you're taking like just a sweep of liquidity, depending on the sweep of liquidity. So let's say you have a sweep of liquidity here, boom, so the market goes down, boom, and then you get your inversion right here, boom. Let's say you get your inversion right here and the market closes up here. Now, sometimes the market will have like bullish candles inside of this, right? So what you can do here, instead of putting your stop loss all the way down here, you can get a better stop loss by covering whatever bullish gaps. So if the market has a bullish gap in here, you put your stop loss covering that bullish gap, because that's going to be our level of support. So if the market comes lower, it should respect that gap. If the market does not respect that gap, then you can kind of already see that maybe it might be a losing trade, because if the market doesn't respect that gap, then we're probably just going to go down anyways, which just means that it was just a losing trade. Okay. But most times the market doesn't even come back to that gap. It'll just keep exploding. Okay. And that's the reason why I started even taking inversions, is because after a super liquidity here, you'd get the inversion and you have like some bullish gaps and the market would just take off. And I had a lot of trades where the market would just take off and not come and tap into the gap for me to take the entry. I don't even know if I saved this. Hold on. No, I did. All right, we're good. All right. let's move on. So I'm gonna go till Friday and then I'll stop there because that'll be halfway through the month. What day is this? Boom. Let's go to the daily time frame. Previous day highs is up here. We do know that we are respecting this daily fair value gap, and we're respecting a daily fair value gap here. So we're in between two fair value gaps. We have a bullish and we have a bearish. Okay, so that means the market could really go either way. We could turn around and give a nice retracement just to fill up all of this price action here and maybe come a little bit deeper, or we could just continue going lower. All right, previous day highs, previous day lows. Let's go to the 1 hour, and that's gonna be right there. Okay, so these lows are still not, that's a nice liquidity. So we have very, 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 very good liquidity at the lows. And then we have Asian highs right here. Previous day lows, we have London lows, we have AM lows, and then we have these London lows. So where do you think our drawn liquidity is going to be? It's going to be down here. So if we can get a short, we're going to take it to these liquidity points. That's basically going to be like the main thing that I'm looking for this specific day. Hopefully we go higher. I hope we go higher first, sweep these highs, and then we take it lower. That'll be the perfect trade. Let's see what fair value gaps we're respecting. 30-minute fair value gap here is getting respected. We're disrespecting these bearish gaps. So we might push higher for the time being. Let's see. We might. I'm gonna keep this on the 5-minute. Just in case we get a gap. Push lower instantly. Perfect. So we're gonna come lower instantly. We didn't get a bearish fair value gap to take lower. That's okay. We're sweeping the lows now. Previous day lows, these lows. Inversions, let's look. We have a huge 5-minute gap here that needs to be inversed in order for us to take a long. Okay. Now the market is tapping into this bearish fair value gap. Okay. Time is it? This candle closed. We have this 1-minute inversion here. I do see. Okay. Is that an inversion? Nope, not yet. Not yet. Time is it? 10:12. Okay, that's gonna be the inversion right there. All right. Take longs here. Where is our stop loss going to be? We just mitigate this gap right here. Where's the 5-minute candle? We're gonna go underneath the 5-minute candle. Just gonna cover that, make it easy. Should have a 1-to-1 at these highs, and then we'll have a 1-to-2 before we even get to Asian highs. So that's not bad. It's gonna be our trade. Sweeping liquidity, lots of liquidity. We got the 5-minute inversion here, which was the only fair value gap that was holding us back. Yeah. And then we're gonna be targeting Asian highs. Yep. That's pretty much it. See what happens though. Just because we say that doesn't mean the market's gonna do it. 1-to-1, we're gonna go break even. Okay, we're break even. Boop. Target these highs there. And we got break even. I love it. I love it. Okay, so we just came back, we mitigated, and I knew that was gonna happen too. We mitigated this right here. And I think Cello is in here. So this is what I really want to back test, because in this case right here, we have this 5 minute fair value gap, and this is going to be like the safety trade to take, is waiting for this 5 minute inversion. But we do have a premature 1 minute inversion right here, right? Market mitigated, we reacted, and then we inversed it. So honestly, if you would have gotten from here, you would have probably already hit take profit on a 1 to 2. That is an aggressive entry. I don't go for those type of entries. Honestly, I always take the safe entry waiting for the 5 minute, but it is there. That is something that I'll have to back test like by itself. But we are mitigating this 5 minute here, as you can see. So if we can inverse these two gaps, I will take a buy. Still mitigating. Okay, we're going a little bit lower here. Coming lower, we're coming lower. Go to the 5 minute. We have another 5 minute right here. Well, we inversed this. I don't like the fact that we inversed that. So let's delete this. That was break even. Sweeping liquidity to the 5 minute. Time is it? We're probably gonna take this inversion. We'll see. Hold on. No, we're not closing yet. So we didn't inverse. No inversion, no entry. This looks like a trash day for the markets. And then, so yeah, we're respecting this 15. We're respecting this 5 minute gap here. I know what you're thinking, seller. You want to short this, but why? Oh, here's why. Well, never mind. Here's why right here. This is why it's important to just kind of just shuffle through the time frames too, because we're still respecting this 15 minute right here as well. We already swept the liquidity. What else do we have to target? We have these lows. We're at 50%. Okay. Okay. We're respecting this 5 minute too. Have the inversion right here. What other inversions do we need? Oh, we don't even need any more inversions. We got all the inversions we needed. Honestly, right here. Well, right here. Right there. That should have been the trade. 5 minute. Okay. So we got the 5 minute. We're going to take the short. Stop loss is going to be above this high, which is our mitigation right there. Since we're still mitigating this 5 minute here. We tapped into this 15 minute here. We already swept these lows. We are bearish still, so let's just go with the bearish side. We didn't get the take profit to go higher, so we're gonna take the short now. See what happens even if go here to the 1-to-1. All right, 1-to-1 hit, 1-to-2. Let's go break even. Ah, come on, don't do this. Not 2 break evens on the same day. Great, that's perfect. Let's keep going lower. And with this strategy, you can see 1-to-1s hit like pretty easily. If you really just want to go for a 1-to-1, that's great. But 1-to-2 is just what I go for. I like that multiple better than a 1-to-1. Yes, we might get break even a lot, but it's fine. There's take profit. Okay. Why did we take this trade? Why did we switch our bias from taking longs to going to shorts? We swept these lows at first. We did take the inversion. We took it higher. We got break even. After that, we realized the market was trading into a 15-minute fair value gap up here. And we remember as well that we did tap into the 50% yesterday, and we were respecting this 1 hour. So our mission to go to the upside is most likely already complete. Just looking at it from a structure standpoint, there's your break of structure right here. So that means this kind of just trend to get us back and just fill this price action to the downside is most likely complete. Okay. By the way, I'm giving you guys this, like this is basically what I'm doing, and I'm giving you if you literally just sit here and look at these entries, this is literally what I'm trying to, this is literally what I'm taking. This is literally the strategy. This is it, right? There's no other gimmicks. There's nothing else. This is literally the strategy. So if you're looking for a strategy to trade NAS, I only trade NAS. If you're looking for a strategy to trade NAS, this is it. You're welcome. Merry Christmas. This is it. 15-minute fair value gap mitigation right there. Let me make this a little bit cleaner. So first I'm gonna keep this here. First, we're gonna do the buy that we took. We're gonna keep that right there. Stop loss was underneath this low. We ended up getting break even. We did not make it to the 1 to 2. Stop loss there. We got break even there. And again in 15-minute. Okay, so we were sweeping London lows, Asian lows, I believe too, right? No. Sweeping London lows and previous day lows. 5-minute inversion was the highest fair value gap. We got break even. 15-minute fair value gap was mitigated and respected. Boom. 15-minute fair value gap was mitigated and respected. After that, what did we get? Let's go back to the 5-minute here. So I didn't see this 15-minute fair value gap at first, but if I would have, honestly, the entry would have been right here after this inversion right here. So let me just get this out of the way. The entry would have been right here after this inversion. So this 5-minute, you see how we have two 5-minute stacks on top of each other? Entry would have been right here after the second one. And then your stop loss probably would have been, let me see. Entry would have been right there. Stop loss would have been above this high, since this is the last mitigation of the fair value gap, right? So entry would have been right there after that 5-minute closure. Stop loss above that wick, since that was the last mitigation. And then of course your take profit would have been a 1 to 2, which you see gets hit like right here as well. Okay, that would have been that trade. But since we didn't see that, we got the second entry, which was off of here. Well, not here, sorry. Which was off of this 5-minute right here. Hold on, let me lock in real quick for you guys. Keep that right there, which was right here. Right, you can see we respected this 5-minute here. Boom. After that we respected it. Let's go down to the 1-minute. Here's the inversions. You see here, we barely closed. We need to close. We need to have a clear closure. So you don't want to question the closure. It's either we closed or we didn't close beneath it. And right here, you can see we barely closed, right? You see the wicks right there. Don't take that. You want to actually see the closure outside, not a tiny body. You want to see an actual body outside of the fair value gap. You can see we got that right here. We got another gap, and you can see this is the closure. That's the body, way past it. So that's where we executed. Stop loss goes above this high, since this is the high that mitigated this 5-minute. And I'm gonna keep this stream titled exactly the same. This is probably just for you guys that's in here. I'm not gonna title this differently. I'm not gonna make a video about this, right? I'm not gonna make a video about this backtesting session. This is for everyone that's just here and you're just seeing it. Okay, so if you get the value, you get it. If you don't, you don't. All right, so It will be uploaded to YouTube though. This is going to be on YouTube. So, but I'm just not going to change the title. So for those of you that know, you know, you can come back to this. 5-minute mitigation. 5-minute mitigation here. Inversion. Executed after the inversion. Okay, we'll keep that there. Right, and let's finish this last week. Well, let's finish this last day of the week, and then we'll look at the analytics, and then we'll stop right there. I'll probably finish the rest of this tomorrow. If we don't trade tomorrow, I'll finish the rest of this on the next stream tomorrow. But that's gonna be my back testing for the day. I'm not gonna back test no more today. This is good enough. Okay. Let's delete this. We can keep this up here. All right, let's see what's going on. Previous day highs is right here. See, it's the same thing every single day. Previous day highs, previous day lows. You want to know where those are at. Because if the market is sweeping that, that is a major liquidity point. All right, go down. Let's check where our gaps are at. We'll have no 1 hour gaps. Let me make this cleaner so it doesn't look ugly. We don't see any 1 hour gaps except for right here. So we know this gap is getting respected. All right. And if you're looking for an entry as well out inside of a gap, it has to be an unfilled gap. So for this example right here, you can see this gap is already filled. I'm not going to be looking for entries inside of this, right? If the market comes lower and we just come lower and we trade here, I'm not going to be looking for entries there. Okay. The reason why we're just looking at this is because we want to know what the market is doing. We are respecting bullish gaps. That's all we need to know. So that just gives us 1+ towards a bullish bias. Okay. Of course, we know overall trend is bearish. That gives us a plus towards bearish bias. Previous days were bearish. We did come into the 50%. So overall, our bias is still bearish. Okay. So that is still going to be the side that we're going to lean onto, but we still want to know that, okay, for this day, the market is kind of trying to respect these bullish gaps. Another thing that we have is we have liquidity here. Liquidity trumps all. So the fact that we have liquidity at the lows, that is adding more to our bearish bias that we probably want to look for shorts to take the market into these liquidity points, because the market's probably going to be seeking those areas. Now, from the day before, and we have previous day lows down here, but from the day before, from this high to this low, here's our swing point. We're coming into the 80%, so we are in major premium. So the market literally has to sell now if we're going to go lower. If we don't sell now, then most likely we're probably going to go for these highs here. And let me put that there because those highs are important as well. We're probably going to go for these highs here or previous day highs. And then we just have a lot of previous day highs sitting up here. Okay, we can go for that. So let's just be cautious on that. Let's go down to the 30-minute. Let's see what we have. No gaps on the 30-minute, 15-minute here. Okay, we have a 15-minute gap. All right, that's what we're going to be working with, this 15-minute gap. As the market opens, we're going to see what happens there. And then we have news today too. I'm going to stay on the 5-minute. I want to see, we got a 5-minute, we're mitigating a 15-minute here. I have a 5-minute inversion. Okay. The market is already opened into the 15-minute, so I'm not going to take this inversion. This is technically already mitigated. Okay. So So the only way we'll take longs is if we get a 5-minute gap right here, and then we take that inversion off of that, right? Let's see. Market is exploding towards the upside. It's great to see. Okay, here's our 5-minute gap. Yes, you see that this inversion, this 5-minute inversion here ended up working out, but look where you would have had to execute this trade. Okay. Either way, even if I was looking for this, I'm not executing this trade up here. It's just too far. That stop loss is crazy. 5-minute, potential 5-minute. Let's keep that there. Potential 5-minute. Okay, definitely a 5-minute. Do we come down into it? Nope. So first thing the market does is we go higher. We're taking out these highs. Okay, we're gonna go take out these highs, and then we have Asian highs up here. All right. If we sweep these highs and we get an inversion, we will take the shorts. Why? Because we have liquidity down here as well. Oh, 1 minute right there. Keep that in mind. Didn't sweep liquidity yet, so that doesn't matter. We still haven't swept liquidity yet, so none of this matters until we sweep liquidity. And then we just trade straight down. News comes and trade straight down. And this is why, stuff like this is why I try to avoid trading before news. So going back to the reason why we waited on Monday or Tuesday, that was yesterday. Why we wait on Tuesday to not trade news is for these reasons right here, right? Imagine being a trader and you have something like this happens. Now, ironically, on Tuesday, the news didn't even do anything, but that's for another day. Okay, so we came up here, we swept these little highs right here. So we did sweep the AM highs from yesterday. I will keep that in mind. We did sweep AM highs from yesterday. I was looking for us to take out these major highs, but the market opened right here and we already swept that. So we swept where the market opened from yesterday. I'm gonna wait for this news to play out real quick. Okay, wait for this news to play out. We're expecting this 5-minute here. That's a crazy wick. Trading back. Do we have a 5-minute gap? Okay, we do have a 5-minute gap. Perfect. 5-minute gap. Any inversions? Any inversions? 2-minute. 5-minute gap. 2-minute needs to be inversed. I'm gonna play 1 candle more. Of course. All right, that has to be the 2-minute inversion right there, this candle, because we're about to be 10-10, so that has to be it. So we're going to have a 5-minute gap here. 5-minute gap right there. Boom. Market is respecting this 5-minute gap. We have a 2-minute inversion. I'm gonna leave this alone. This 15 minutes already mitigated, so we don't care about it no more. Yeah, we're gonna short off right here. Stop loss is gonna go above this high. And wish us luck. Let's try this. We're gonna target both of these liquidity points. Our 1 to 2 lines up around that area. That's perfect. And let me make sure this is, come on, FX replay, lock in. There we go. Save. And let's get it. Let's go. All right. Let's go. 1 to 1 is right there. We just need to make it to the 1 to 1. That's it. Let's make it to the 1 to 1. We might not make it. Might have a losing trade here. That is crazy. Okay, so we have a losing trade on this day. Let's go to 15-minute real quick. I want to see some things. Yeah, 15-minute did get inverse here. See, we did sweep liquidity. We have no other inversions. I want to see if we made any mistakes. Nope, 5 minute did get inverse right here. All right, so yeah, it was just a losing trade this day. All right, let me put that here. We had liquidity at the lows too. Our bias was to take this lower, but we're still respecting this 15 minute down here. You can see we're still respecting this 15 minute. And that's okay. What time is it? It is 10:57. We have about a couple more, no more fair value gaps. It's perfect. All right, so we had 5 minute. Five-minute fair value gap. Mitigation. We had the inversions here. 2 minute inversion. And we swept liquidity. We swept previous day open highs. But good. Stop loss. All right, let's see if we can catch anything else. Still got like about an hour left in our trading time. So 5 minute here. Okay, waiting for this 5 minute to close. Okay, there we go. Maybe we can catch along into this previous day highs. Maybe. Or we'll catch a short. Why? Because these highs right here that we're sweeping. So if we inverse this 5 minute, I will take a short again and we'll try it again. Or we just inverse all of these 1 minute gaps, whichever one we do. Okay, we're tapping into the 5 minute. We don't have anything to take towards the upside, unfortunately. 5 minute, still mitigating here. Is Salo still in here? What do you want to do? You want to take this long? I can see why. We have this inversion right here. Let's sweep these lows here. You're gonna go for the long? All right, let's go for the longs then. Go for the longs. We're targeting previous day highs. Let's go for it. This will be our last day trade of the day, whether we lose or win, because it's around like what, 11:17. Previous day highs, that's 1 to something. We'll go to 1 to 2 right here. Place that. One to one, it's gonna go right here. Didn't get break even yet. Now we're break even. Stop loss right there. Let's see if we can get this 1 to 2. All right, entry really was supposed to be right here, but it is what it is. I'll just put in the back test. And you see, as soon as we get to these previous day highs, as soon as we get here, look at the rejection. This is why we mark out the previous day highs and previous day lows, because like literally these are like the best entries. But we might go lower. Let's see. No? Yeah, break even, bro. I also want to see if this entry really did matter. Let's see. Did the entry really matter here? Yep, it mattered. It mattered. So you can see like the difference between just like a late execution, just taking it off the next candle here, you missed a 1 to 2. So this is a break even trade. We'll keep it as a break even trade, but I will put it like, I'll put 2 trades next to it. I did play 1 candle forward accidentally. it happens. 1, 2, boom. So 1 hit TP, 1 hit break even. That's the difference right there, bro. All right, why were we taking longs? Why were we taking longs? Market invalidated. Nah, bro, this is NAS. NQ, NAS 100. Late execution resulted in a break even. Correct execution hit take profit. Previous day highs was the target. All right, so that's it. It's already past 12, so no more trades for today. Analytics for the last 2 weeks, 73% win rate, 15 trades, 11 wins, 4 losses. Average R 0.92, max R 1 to 2. That's what we target. Max consecutive wins, that's probably incorrect. It's probably about like 3 because break evens. Max losses, that is definitely correct. But the max wins, the max consecutive wins, I know is incorrect because of the break evens. So far we're up 6% for the month. We're halfway through the month, and these have been the trades so far. Yeah. So yeah, pretty good back test. Win rate here is probably around, like, I would say 60, 61 to like 62%, just because of the break evens that FX Replay counted as wins. But yeah, little back testing session for you guys. Like I said, this is gonna be uploaded, so I'm not gonna change the title. I'm not gonna make a video about this. Right, I mainly back test by myself, but since I was here and we weren't trading, and just to kind of end it off, I really want to see where the markets kind of ended up for today before we get out of here. Yeah, we end up going to that 1 hour gap here. Our trade would have been break even though for today. Would have got break even. So just to kind of, let's look at today as we would look at a back testing session that we just took. First thing we do is we see what? Sweep of the lows. Sweep of the lows. Sweep of the lows. So just looking at that. Sweep of the lows here. We know we took the inversion right there. Boom. I had a late execution this morning, got to the markets late, ended up executing up here, stop loss here. And then we hit a 1-to-1 here, would have got break even right there. Okay, correct execution would have been on this candle that closed above this 1 hour gap. Stop loss still underneath the same bodies right here. And this right here would have actually missed take profit too by like 0.5, which is the most annoying thing ever. But yeah, bro, you can combine it with whatever makes sense to you, but that is the mechanical way of trading it, right? The mechanical way of that strategy is basically you're waiting for either a sweep of liquidity. You're waiting for a sweep of liquidity and you're looking for an inversion. For this case right here, sweep of London lows, inversion, right? That is the mechanical part about it. When it gets to like subjectiveness and everything like that, you have to be good at drawing a nice bias, understanding where you're at. So I would say that's the part that where you can mix in your smart money concepts, is just knowing where you want the market to go. That way you know which liquidity you're looking for the market to take, and you know which gaps that you're looking for the market to respect, right? Because you're not taking any entries until you're either sweeping liquidity or you are mitigating a higher time frame gap, which is right here. All right, you can see it right here. These are all the rules. These are all the rules. These are step by step. You want to build your bias. Everything we did, just to kind of review the whole back test, and then I'm gonna just kind of just end it right here. Everything we did was just based off of this right here. The market moves in two different reasons. We're either going to be targeting liquidity or we're going to be rebalancing the range. And basically what that means is we're going to be just coming back, right? In this case right here, for today, we're rebalancing a range. What does that mean? From this side to this low, the market is coming back to rebalance and get back into equilibrium, which is 50%, right? Either the market's going to be doing that or the market's going to be seeking liquidity. You can see we already took out all the major liquidities of the day. So since that's already done, what else does the market has to do is going to come back and try to get back into 50% of this. So when you start your bias, you want to draw out your premium and discount areas. Where are we at? What's the last leg? Everything like that. You want to draw out your liquidity points. As you can see, every single day, every single back test that we did, every single day for that back test, we went to the daily time frame. We drew out our daily highs and our daily lows of the previous day. For example, here, that's previous day lows here, and this is going to be previous day highs, right? You just want to keep that as a staple. Those are your main liquidity points for the day. Okay, boom and boom. All right, after that, once you do that, you want to draw out your session liquidities, which is going to be Asian session and London session, right? You want to mark those out. And then for this indicator, whoever wants it, it's called FX sessions, or just called sessions now, I guess. So it's called sessions now. Let me go see if I can find. It's FX sessions by BioToki. This is it right here. And these are my settings. Well, these are the settings for the dates. I only have London session and I only have the Tokyo session marked out. 20 is 8 Eastern, 0 is 12. And then 2, that's 2 a.m. Eastern, and 5 is 5 a.m. Eastern, right? This is the times. My time zone is in GMT -4, so apply it to your time zone. Boom. After that, like I said, boom, you're going to be determined to draw liquidity. After you get that, so for today, for example, our drawn liquidity was right here. Once you get that, you want to know which fair value gaps are you respecting. Are you respecting bearish fair value gaps? Are you respecting bullish fair value gaps? In this case right here on this day, we can see the market here is disrespecting right here. We're disrespecting these little bearish fair value gaps. But the reason why also I closed the trade this morning is because we're in a fat 4-hour gap. So honestly, I came in today with my bearish, with my bias being bearish. But since I seen we swept London lows first, that's when I knew that potentially we can come dive deeper into this fair value gap and get into this 1-hour gap right here, which has never been tapped into. Okay, so you can see that's where the market kind of came into. Now we're just rejecting off of it, right? So you want to mark out your gaps, right? Where is the market respecting? Is the market respecting bullish gaps? Is the market respecting bearish gaps? That's going to kind of give you, just a view of where the market could go for that day. After that, unless we are mitigating into a higher time frame gap, for example, right here, unless we're doing this, mitigating into a higher time frame gap, or we are sweeping liquidity, which is right here, either London session lows, London session highs, Asian session lows, Asian session highs, or you have previous day lows or previous day highs. If we're not sweeping liquidity like that or mitigating a gap, you are not looking for your inversion. Okay, that's the only time you go down to a lower time frame and you actually look for an entry, is when we are doing one of those two things. All right, and then your inversion is always going to be the highest time frame of the manipulation. So for this case right here, all of these gaps right here, we don't care about this 1 minute gap. We don't care about none of these gaps. Why? This is not the manipulation. This is, right? So within this right here, this being our manipulation, whatever the highest time frame gap, in this case, is a 1 minute gap, because once you go to the 5 minute, there's no 5 minute gaps, right? So in this case right here, it's a 1 minute gap right there. Once we inverse, and inverse is basically when the market closes above this bearish gap, that means we invalidated it. Once we do that, that is going to be your entry. Boom. Stop loss goes underneath this body. If there's a fair value gap inside of this, then you can put your stop loss underneath that bullish gap to kind of protect yourself. Other than that, if there's nothing else, then just put it under the bodies or the wicks, right? Whichever one makes sense. In this case right here, the bodies made sense, okay? And then that's gonna be your entry, right? Your entry is always gonna come like that. It's always gonna be after the inversion. If there's no inversion, if you see the market sweep these lows and there's no inversion, you don't take an entry. What do? So in this case right here, you're going to wait for the market to create a bullish gap, right? So let's say we get a sweep, and this is gonna be the last thing I'm talking about. Let's say we get a sweep. Say we have liquidity here, and say the market goes down. Let's say we sweep this liquidity. But before we sweep this liquidity, let's say we fill every single gap, and then we sweep the liquidity, and then you see we push higher, right? If there's no gap inside of here for the market to inverse, you're going to wait for the market to create a gap, right? You're gonna wait for the market to create a gap. And most of the time, I'm gonna wait on the 5 minute time frame. So you're gonna wait for the market to go higher and create another gap. And when it creates that gap, let's say we create a 5 minute gap right here, you're going to zoom in back into the 1 minute, and you're gonna look for the inversion here. Let's say there's no inversion here. You're gonna wait again. You're gonna wait for the market to create another gap. You're gonna wait for the market to create a gap. That's the only way you're gonna enter into the inversion. The reason why is because inversions happen everywhere. Okay? Inversions happens everywhere. Here's an inversion right here. Boom, here's another inversion right here. Right? Inversions happen everywhere. So you want to make sure that you're taking the inversion where it makes sense. Either we're going to be sweeping liquidity or we're going to be mitigating a gap. That's it. That's the only time you're looking for inversion. And that's pretty much it. That's the strategy. I just gave it to you guys for free. So whoever's in here, whoever's looking at this, there you go. That's pretty much it. So that's why I'm gonna be trading. I'm going to be going live every day. I'm gonna try to go live every day, but mostly it's gonna be every day. So every day I'm trading, I'm just gonna be going live. I bought another Top Step account. I got 50K. I was gonna buy more, but this week is trash. So I'm gonna wait till next week. I'll probably buy like 2 or 3 more, and then I'm gonna copy trade them. And yeah, that's what we're gonna be trading. We're gonna be trying to get funded with Top Step. That's the goal for this month, to get funded. I want at least 5 accounts. So that's gonna be the goal. I'm gonna be live streaming every morning, and we're just gonna be trading NAS. All right, we're gonna be chilling here trading NAS. Backtesting sessions, I'm not gonna do this often. Okay, this is for you guys that was here with me, rocking it with me. We're just chilling, so I just did it. But it's cool. Appreciate you guys for being here. If you have any further questions, please let me know right now before I end the stream. Give you like a minute or two. All right, I don't see any questions, so I'm gonna end the stream here. I appreciate you guys for being here. This is gonna be uploaded, so if you want to go back and review the back test that we did, then this will be uploaded like immediately once I end the stream. So we're gonna go back, review it. Go ahead. Appreciate you guys for being here. Wait. How do you manage risk and funds? Could you make a video about risk management? What kind of roadmap do you use? Right now, For my futures like challenges, I am risking 2%. So I'm risking whatever the max drawdown is for daily drawdown. That's what I'm risking. All right. There's no breach if you do hit the daily. Like, I think you can only like hit 2%. You can only lose like what, 2%, but there's no breach. It's a soft breach that just won't allow you to trade for the rest of the day. Okay. So that's the limit. And we're basically risking that. The max daily drawdown though, which is the hard breach, is about like a 4%. It's a trailing drawdown. So basically I'm just risking that and trying to pass those challenges as fast as possible. Now, when it comes to the funded challenges, we're not doing that. What I was just doing here on the back test, where you see we're just risking 1%, 2%, that is going to be for my funded accounts, right? I'm only risking 1%, never over 1%, and we're only targeting 2%. So we're 1 to 2. That's it. That's going to be like the simple management. And then once you get to a 1-to-1, you go break even. That is for this strategy personally. If you have something else that you're talking about, be more specific. But for this strategy personally, just me trading these funded challenges, we're only going to be risking 1% per trade. At a 1-to-1, we go break even. 1 to 2 is full take profit. It's right here. You're going to be targeting liquidity as much as possible, right? So it's good to have a liquidity or either a fair value gap or something that is going towards your direction that drives the market to want to go there. And then 2 max losses a day. So if you take 2 losses a day in one day, it doesn't matter if you take 2 losses. Let's say the market just opened, it's 9:30, and by 9:50, you already took 2 losses. You're done trading for the day, close it, you're done. No more trades. I don't care if you see the best A+ setup after that. After 2 trades, you're done trading for the day, okay? And then once you get 1 win, let's say you open up the charts, it's 9:30, you're already out of your trade and you hit take profit by 9:35, that's it. It's an early day. You're done trading for the day. So that is going to be like as far as like your risk management for that, okay? So if you guys have no more questions, I will see you tomorrow. Hopefully tomorrow is a better price action day. Hopefully we can get some nice trades tomorrow. No problem, brother. Thank you for being here. Peace out, guys.